Yo, what's up, everyone? I hope you're having a great day. I'm going to be giving you a. Yo, what's up, everyone? I hope you're having a great day. I want to give you a stock portfolio update. I'm going to go over every single stock that I own and just how my portfolios are doing. So, I have three portfolios here: my Robinhood account, my Moomoo portfolio, and my Weeble portfolio. And I have a different goal with each one. Like my Robinhood portfolio in the top left, it's called my dividend only portfolio because every stock in here pays a dividend. But as you can see, most of these are like dividend growth companies like Google, Meta, Constellation Energy, CSL. These have really low dividend yields, but those are the kind of dividend stocks I want. Dividend companies with low dividend yields but low payout ratios so they can just invest all their money back into the business, do share buybacks. But yeah, this portfolio is finally green. We're up 1.37% year to date. And in the past year, we're up 13.5%. Here's my total percent change in every stock. So luckily, we are green on every single stock that's in here. Yeah, we're up 100% on Google. They just reported earnings, but they've been slightly down. McDonald's hit an all-time high today, so that's good news. My Carlisle stock is up 27% year to date, so we're now up 23% on them. We used to be down on them, like negative for the longest time, so it's great to see them have a recovery, and United Rentals. So that's our dividend only portfolio. We also have a Roth IRA. A Roth IRA is just a tax-free retirement account where you don't pay any taxes until you like withdraw it at 55. Well, no, you don't pay taxes when you withdraw it at 55. But if you withdraw it early, you have to pay taxes. But yeah, here are all the stocks that I own in here. Looks like everything is green except for a kind of defensive HCA Healthcare Hospital Group stock. One company I did just buy some more shares of is Webull. It's a super small position because even though they're at an all-time low, I do think Webull's a little bit expensive, but that's one of the stocks I have been buying a little bit of. But yeah, that's our Roth IRA. Most of our stuff is pretty red. Like Webull, we're down 30. We're down 30 on Cormedics, and we're down 7% on Cavco. So yeah, that's our Robinhood portfolio. We also have a Webull account. What up, JV Invest? Hope y'all having a great day. What's up, Todd? Good to see you, Catherine. Hope y'all are having a great day. I know the market's booming. So here's my Webull portfolio. This is like my risk on account. I don't really have any rules. I kind of just do whatever I want in here, and it has not done well. Here's our total open profit and loss since making this account. We're only up 8.23% all time, so definitely not some great number. We've definitely underperformed. Here's some stocks that are up on the day. What was it? AMD was the leader. Yeah, AMD's up 8%. Davis up 15. My most recent TikTok and YouTube video is a video of me going over Dave. They're up 15%. I just made a video about them. UiPath is up 5.5%. PSIX 16%. Robinhood 15%. So yeah, this is a great healthy relief rally that was really needed from yesterday's huge fall. Like if I go to my past week on this portfolio, it does not look good. It's like we used to be well up over 100% on Reddit, 100% on AMD as well, but we've definitely taken a beating. So yeah, that's our Webull portfolio. And then we have my Moomoo account, and I'll show you the stock I just bought yesterday in this portfolio. And this actually portfolio is at an all-time high today. I can't believe it. I literally can't believe it, but we are up on a return money weighted average 21% year to date in this portfolio because I have a rule where once I buy a stock in here, I can never sell it. If you're wondering, how are you up 23%? Well, it's mainly from Powell Industries. Look at them today. Well, you can kind of see the past week. They are up 75% year to date. Just since January 1st, we're barely in February, and this is already up like 80%. So yeah, this has led to a lot of the year to date gains. This is at an incredible new all-time high. We bought this stock. Well, there's our buy order, at $80. So that one's been a crazy good one. And Comfort Systems. These are two AI beneficiary companies where when Google and Amazon just announced they're spending $150 billion and $200 billion on CapEx, that's straight to the benefit of Comfort Systems, Powell Industries, these kind of names, these AI infrastructure names that have no debt. Both of these companies have no debt whatsoever because right now companies with a lot of debt are being punished with the new chairman Warsh. So the stock actually just bought yesterday though at an incredibly cheap valuation is actually Amphenol stock. I bought a share of them yesterday at $128, and I did not expect this, but they're already up 7.5%. It's kind of just the whole market right now. But even after being up 7.5%, they're still relatively like There's still a lot of upside. Like if we look on the right, the forward PE is a 29. I feel like that can really stretch up higher for the amount of growth this company has. I'm about to show you the numbers that justify, I believe, a higher multiple than a 29. So this is a company that supplies copper cables to Google and NVIDIA. Those are like their main customers. Google's TPUs, NVIDIA's GPUs, and NVLink spine products uses miles of copper cables, and Amphenol is the main supplier for that. So if we just look at their revenue, just basic sales, it's up 49%. That's incredible. Like if we kind of zoom out on the revenue, that's what you want to see for a growth name. And the revenue's up, what was it? The revenue's up 49, but the net income is up by 60%. This is why the stock has exploded this past year, specifically because the net income has exploded. And that when the net income is growing faster than the sale, that means the net margin's growing. So they have a record 18% margin, 20% last quarter. Gross margins are up 12, net margins are up 8. The free cash flow is incredible, $1.5 billion of record free cash flow quarter. Like they're actually retaining their free cash flow, not like Amazon, who's spending all their free cash flow. And I love Amazon. I actually think it's a good dip to buy. Speaking of that. But anyway, Amphenol stock, and you get a good yield with this company, a 0.55%. Or actually, it's like a 0.7% dividend. That hasn't updated. But yeah, that's my most recent purchase. Decided to buy them yesterday. And I haven't sold anything. I haven't sold a single stock. I haven't trimmed a single company either during this mayhem. I've just been buying more. So yeah, Amazon did fall on earnings. They're down 7%, but this is a dip that I would buy, not financial advice. They're pretty cheap now. If we go to the forward PE here on the right, Amazon, the growth behemoth, is at a 26 forward PE. That doesn't seem right. I mean, I really feel like Amazon deserves a lot higher than a 26 forward PE, and they beat on their metrics. They beat on revenue. They missed by 1 penny on EPS. They expected $1.96. They did $1.95, and they had like a $2 billion like one-time severance charge thing that hurt their EPS. So adjusted, I think they beat, and even the EBIT. So basically, the earnings before interest taxes that beat. So it was a great quarter. So like this is what we're seeing with Amazon. Like this has been a margin expansion play. And the AWS business has been growing so much. So it looks like, so gross margins are up 2.3, net margins down 6%. I think that was from a one-time adjustment for us. Oh yeah, look at this. So yeah, if we go to the operating profit, it actually grew more. So yeah, sales are up 13, operating profits up 17. So they did grow their net margin technically. Yeah, look at that operating profit. That's a record quarter. This is basically the before tax number, before taxes and interest and those one-time adjustments. So you would subtract another 15% from this for taxes, or a 3 billion for taxes. But yeah, no complaints on Amazon earnings. I love that the reason they fell is because they announced they're spending $200 billion. And, that's to the benefit of all the AI kind of infrastructure ecosystem of stocks. But Amazon's always spent a boatload of money. If we go down here, the cash from investing activities, whoa, this quarter they spent $47 billion. That's literally like the market. That's the entire market cap of Comfort Systems Plus and Powell Industries combined. Just this quarter, like they're spending entire like countries' GDP's worth of like money every quarter, and they're going to be spending. They said 200 billion, so that's going to be 50 billion cash from investing activities a quarter they're spending. And again, you want this to be negative. If this number was positive, that means they're actively selling out of their own assets. But I love what they're doing with AWS. It's their most profitable business. It's growing like a behemoth. AWS is the number one market share cloud business, like 25% market share, highest margin for them. And it does over 100 billion of annual revenue for them. So. That's why I was waiting for like the market to kind of wake up and digest the earnings. Like, I don't think they should have fell all the way to $200. And now they're, up a little bit. They're only down 6.8%. That still sucks, but it's not as worse as when it was down 11, 12%. So yeah, Amazon, I would not be scared. If I was a shareholder, and I am, do not sell, do not really be worried. I wouldn't be. Finally, a Green Day. Yeah. What up, Nathan K? He said DOCS. What is DOCS? Was that? Ooh, they're down 18% of the day. So this is a software name. I don't really know what they do. I don't know if it's kind of like a DocuSign kind of stock, but let's see if we can figure out what happened here. They beat on revenue, they missed on net income, but beat on EBIT. So they had a slight little hiccup. So they are making net income. So let's see here. Yeah, they're making 60 to 70 million in net income a quarter. It looks like the net income, did fall 18% year over year. But what's the multiple? 24 forward PE. So, okay. So yeah, look at that. They're on the left, the current PE is a 22. The forward PE is actually higher. So that means the EPS is going to go down. So they're entering a negative PE environment. And, software is trading cheap right now. Maybe AI could hurt this one in the long run. I don't know if they have like a strategic moat on the online platform for medical professionals, cloud-based software. So virtual patients. So something like that. I don't know. Huh. I wish I could give you more thoughts on this one, but I mean, it's not like a terrible company because they really do make, 60 mil in net income a quarter and they have no debt. So that's a great, safety net, 750 mil of cash and no debt at all. So, and what's the market cap? $5 billion. So there you go. Not too shabby, but I don't know how quality they are. Why did Google stock fall even though they had good earnings? So let's pull up Google because, yeah, you're right. They just reported earnings and they're not down too much. I mean, they're only down 1.87%. I actually have not looked at Google's earnings, so this will be my first time looking at them. So this was a good beat. They beat on revenue. They beat on EPS, which is net income, but a slight miss on EBIT right here by $1 billion. That's no big deal. So let me zoom in here. So revenue this quarter was up 18%. So revenue's up 18. Net income's up by 29. So this was a slight one-time adjustment. If we look at the operating profit this quarter, it was 35.9 billion. That's the before tax number. They should be paying, 5 billion of taxes. So the net income should be around 30 billion. But so basically this says they only paid like 1 billion worth of taxes. I don't believe that. So basically the net income was slightly lower than this, but it's no big deal. Google still makes, if we look at this right here, 30 billion, basically 28, 30 billion of net income a quarter, and that's going to grow as well. So I'm not worried for Google. They can afford to spend, whoa, I didn't know there was this much. Oh yeah, Google guided to spend $150 billion. It was way higher than estimates. So it was on there for their Google Cloud expansion. And they spent 51 billion just this quarter. I do think 10 billion of this did come from Wiz. They acquired a company called Wiz. It's a cybersecurity company, and that did lead to that part. And it was added to the Google Cloud segment. So not all of this 47% year-over-year growth was just Google Cloud. Some of this was the Wiz acquisition, but still, I'm super happy with this growth because a lot of people are scared. Like, hey, Google's main business, or 80% of Google's business is their search business, but they have these other bets, these other businesses like the Google Cloud that's growing massively, up 47% year over year. They're in cybersecurity. They own Waymo. They were the largest funder of Waymo's $16 billion funding round. Google's thing was great. Oh yeah, Alphabet introduces Project Genie. Did anyone see AppLovin and Unity stock fall like 15, 20% and then 10% the next day? That was because of Google and the software. So oh yeah, look at that. Waymo secures $16 billion funding at 126 valuation, plans expansion over 20 cities. Alphabet to acquire wind and solar developer Intersect for $5 billion to power data centers. Google adds NVIDIA RTX Pro 6000 GPUs to Cloud Run. So, anyway, no complaints on Google, ETF and One. They own YouTube, Android, all that. So, and they pay a dividend. You get 0.3% dividend, low payout ratio. They buy companies, and they're cheap on the ride. 28.4p. What app? Yeah, in the link tree in my bio there, Marcos, the very first link there. This is the software, this brokerage I'm using. It's where you buy stocks. So yeah, if you want to get this with my affiliate link, this app I'm on Linktree about first link there. Hey, what up? XZR. I got 100 MSTR. Oh, that's MicroStrategy. Yeah, this is basically like that leveraged Bitcoin kind of stock. Yeah, look, here's the price of Bitcoin versus MicroStrategy. Like, especially back here, obviously they're not perfect, but they rhyme together. So whenever Bitcoin goes up, MicroStrategy kind of goes up more. Whenever Bitcoin goes down, like recently, as you can see, it kind of falls more than Bitcoin does. But they're up 23% because I think Bitcoin's up like 10, 15% of the day. I don't know. It's crazy. Almost took Dave earnings from your video after the week. Hell, hey, Dave, I just made a video about Dave stock. You know what? They actually did not report earnings. They did something called preliminary earnings, which is, I don't know why. They basically just report their earnings early. So they actually have not reported these numbers yet, but they basically just told us what the earnings are going to be, and they were fantastic. So that's why this stock is up 16%. I could click on the news tab and go look at the numbers, but I'd rather wait till they actually report earnings and then load down there for me to go over them. So yeah, I do actually own them in my Webull portfolio. I think they're up, look at that, 15% on the day. AMD's having a rebound too. SoFi, Robinhood, they got hurt hard. Robinhood was down like 50% on just like I was pull up this exact like 1 month chart. It was down like 50%. It was crazy, but they've recovered a little bit, which is great news. So have fun said UNF stock. Let's check out this one. Uni First. I have actually not heard of this company before. So there were 3 point. You know what? I don't know what TikTok's saying there. Okay. Anyway, this stock right here, $3.65 billion company. They're trading at a 28 forward PE. The stock has kind of been flat. So this stock is the same price that it was in 2019. So let's see if we can figure out what happened here. So Uniform and Facility Service Solutions. Let's check out their revenue. Is it growing? So yeah, that might be why. Or they're growing, well, recently the growth has slowed down, like low single digits. If you look at the bottom here, like 2% growth rate, -4%, plus 1.23, plus 1.95, plus 1. Like this is low single digit, 1 to 2% growth that doesn't really outbeat inflation when you add inflation back to this. So we definitely want to see them grow their top line faster than low single digits. So yeah, look at this. So the revenue grew 2.7, but the profits fell by 19. That means the margins are going down. They're still making money every quarter. Like that's why they have a PE ratio, forward PE. They're still making money every quarter, but I think the reason the PE ratio is low and cheap, well, it's not even cheap. It's actually, look at that. The PE on the left's 26. The forward PE is higher. It's a 28 because the EPS is supposed to go down. Yeah, it's supposed to go from $2.13 to $1.83 on the year-over-year comp. So that's one thing to watch out for. That might be why the stock has been struggling. But again, it's not the end of the world. Like they're still making a lot of money, but I'd just be careful. I think we can understand why the stock has kind of been flat because the revenue growth has been flat. But not too terrible. Stealth said NFP. I've not heard of this one. I looked up NFP. I cannot find that one. I looked for you, Stealth. Maybe it's a different ticker symbol. Microsoft. Yeah, Zero. What's up, man? Microsoft stock. Yeah, let's do it. What up, One Junior? And remind me to get to Robinhood and SoFi stock. I want to get over these two. And CoreWeave. Hey, what's up, Max? We'll do CoreWeave too. Remind me. We'll be live for another over an hour, so don't worry. We'll definitely get to all these. So Microsoft, I think, is a fantastic deal right now. Just on every metric, like the forward PE is a 22. That's the cheapest Microsoft is nearly ever traded at since like the 2022 dip for like 4 years ago. Like that's crazy. They're this cheap, and it's not like they're cheap because they're missing on their metrics. Like no, they're just cheap because all of software is being hurt right now because Microsoft is a huge software business right here. It's 42% of their business, the entire company. Think OneDrive, Office, Excel, those softwares. Microsoft 365, the whole thing, that does over 120 billion of annual revenue from Microsoft. It is really high margin too because it's software. They really converted over time from selling hardware PCs to software. And they also have another huge business for Microsoft is their cloud, their intelligent Azure cloud that grew 28% year over year to $33 billion. That also does over 100 billion of annual revenue a year. Then they have their hardware, PC sales. This doesn't matter. It was slightly negative year over year. That's been lowered. It's been flat since 2022, but that's their low margin. They're focusing on their best businesses. So yeah, the revenue grew 16. The net income, well, this was a one-time adjustment, but revenue's up 16. Net income grew by 21. This is the before tax number. They did 38 billion before tax and before interest. So they don't pay much interest. Well, maybe they do actually. But anyway, yeah, 38 billion, so impressive. If we kind of zoom out, like this is why, like, they're the cheapest they've been since 2022, but like, look at this. This is incredible. They're also kind of seen as like a pseudo OpenAI short, I guess, like, because they own a lot of OpenAI, I believe, like maybe, or they have like the right to buy 49% of it, but they have like exposure already. But anyway, they're also spending a lot on investments too. I think Microsoft's a steal, but like, honestly, not financial advice. If you buy Microsoft right now, you should just get 8 to 10% of your money back on average for the rest of the time, not financial advice. Like it really, like I can't believe it, 22 forward PE. Oh, AMD stock. Yeah, AMD, this one right here, I do own AMD as well. Let's see if there's any news. Intel AMD notified Chinese customers of server CPU supply shortage with delivery delays up to 6 months. Completes ZT Systems acquisition and secures OpenAI GPU supply agreement. Wow, data center revenue grew 38%. Um, Agreement with OpenAI for 6 gigawatt deployment and returned 1.3 billion in buybacks. Well, let's see their numbers. I actually haven't looked at them. This was a great beat. Look at this. They expected 9.67. They did 10.27. So great beat on revenue and on EPS. They expected 83. They did 93. And then on EBIT, they beat too. So every metric beat. So it's not like just some one-time adjustment. Like they really triple beat. Let's check out the data center revenue. Is that loaded here? Oh, it has. Okay, so data center revenue. Let's see what it was year over year or quarterly. Whoa, this was a good bump. 40% year over year growth. That's the highest it's ever been. 5.38 billion. It's never even been close to that before. So that's up 39. Client revenue. Now, I mean, that looks pretty good. I mean, maybe that looks good. And then gaming revenue, that's having its recovery, so that's great as well. All right, let's see. Net income looks great. Kind of zoom out here, that's kind of what you want to see for a company with a high PE, high forward PE. Let's see here. So they're still expensive, but they're having this year's like 50% growth rate, going from a 78 PE to a 46. So you really look at the next year's PE, the year after that forward PE on a PEG ratio, price to earnings growth, they're at like a 0.95 PEG ratio. They're actually cheap to buy now, but I wouldn't buy it here meaningfully. I'd be careful just because of how the whole market is right now, but I'd just cautiously, slowly nibble dollar cost average. What app are you using for this info? Yeah, hey, if you want to get this app I'm on, it's actually in the link tree in my bio, that very first link there. It's a brokerage, my favorite app to buy stocks on and analyze stocks. It's free, costs nothing. And if you go, you don't even have to deposit money to get all these tools, but if you use it for your brokerage and deposit $100, we'll both get some free stocks if you use my affiliate link. But yeah, it's a broker called Moomoo. Yeah, it's also, if you're on YouTube stream, someone asked it on the YouTube stream as well, I just saw. If you're on YouTube, it's in the link in the description. If you're on TikTok, link tree in my bio, first link there. Okay, let's keep going here. Look at some more stocks. Yeah, today is crazy. I know, man. I can't believe how much the market's going up. But yeah, I wanted to get to CoreWeave. NVIDIA owns a lot of that stock. Let's actually pull that up because we can see what NVIDIA actually owns. They're so big that they own a bunch of stakes, and one of their largest holdings, or actually 80% of their portfolio, is just CoreWeave stock. They own a bunch of stocks that are just like CoreWeave. APLD, Nebius, they all do the exact same thing. They all just own a bunch of GPUs in a data center. So these are one of the data center stocks. I'm not too bullish on these super long term because of the depreciation thing, and there's nothing like super proprietary about this stock. Like they literally just own a bunch of NVIDIA chips in a data center. Nothing proprietary and like patent, like, you know what I mean? So look at this. NVIDIA invests $2 billion in CoreWeave. Whoa, increasing their stake to 11.5%. So basically NVIDIA, so that might be why CoreWeave's up. I didn't know that. That's pretty cool. More money going into them. So NVIDIA invests more money into CoreWeave. It's already a big chunk of them. So they now own 11.5%, I guess, of all the shares that exist. Pretty interesting there. So CoreWeave, again, you really look at their top line growth rate. They just IPO'd like a year ago, so there's not too much history here. But yeah, their revenue is growing triple digits for the past couple quarters in a row, and it's not expected to stop. This was a record quarter, 1.36 billion. Look what the analysts are expecting in 2 quarters. It's supposed to be 2.25. That's still continuing that triple digit revenue growth streak. But bad news is they're still supposed to be EPS negative, losing 50 cents, 60 cents the next 2 quarters. And that's the same as losing 300 million a quarter. So they still expected to lose 300 mil for the next couple quarters. But yeah, it's that might be why the stock's pumping. NVIDIA now owns 11.5% of it. Starting to make sense. All right. Nathan, you said a certain company is cheaper. Sorry there, Michael. Sometimes I just say stuff or I forget. My bad. Hey, what up, trading analysis and greed? CMPGY. Sorry if I'm missing some stocks here. I know there's a lot of stocks here I want to get to, and I apologize if I'm missing some of them. So I don't know what this stock is. It's some ADR. But we'll check it out really quickly for you. I got you. They're at a 20 forward PE, so that's a pretty cheap valuation. Where are they from? 62% of the revenue comes from the U.S. Compass Group. They're headquartered in Britain. sectors of business, healthcare, education. So it's like a diversified. Oh, Compass. This might be an asset manager. Maybe I've heard of them before. So because they're headquartered in Britain, they actually report in halves. They don't report like U.S. companies. So they report every 6 months. And here's kind of the net income. Look at that. That's actually a record full year net income quarter. For the full year 2025, they made 1.88 billion in after-tax net income. Yeah, that was after tax as well. Yeah, nice. Interesting. 2.13% dividend yield. I'm not sure, but I think Compass might be one of the companies that own like RuneScape. I don't know. I know it was sold off from like Carlyle. Okay. Ooh, Reddit stock. They did report earnings. I do own Reddit. They're an incredible company. Oh, dang, they are down 4%. What? Because they were up pre-market. All right, so they're at 144 right now. Let's go see what their earnings were. So yeah, great beat on revenue. They expected 667. They did 725. So beat on revenue. Good beat on EPS, $1.24, and on EBIT. So a triple beat quarter. Yeah, really, 250 million in net income. Oh, it was a slight one-time adjustment, but so it really was around 220 million in net income, but it's no big deal. That's incredible. So the most profitable they've ever been. If you kind of annualize this, if you kind of give them the benefit of the doubt here, well, they'll have this growth rate. They're going to be making over $1 billion of net income a year, which would actually put Reddit in my math, my own kind of crazy numbers. Nathan PE, forward PE, is they're actually trading at 28 times forward PE, which actually makes Reddit at right now's prices really good. They're known as like one of the last real places on the internet. They have no debt. They now have 2.5 billion of cash with no debt. So already almost 10% of the market cap is just pure cash. Because yeah, if it was a 25 bill market cap, that'd be 10%. So right around 8% of what you're paying, 8% of the entire market cap is just their net cash on hand that earns interest. And a 27 forward PE. I am actually about to maybe buy more Reddit. I am super impressed. Oh yeah, and they print free cash flow. The free cash flow yield's even crazier. If we do like a free cash flow forward PE, it's even cheaper. So no complaints on Reddit. And I am a shareholder. So, and I'm even up still, even after they dipped. I'm still up 50%. I wouldn't have Reddit as a crazy big size position. I'm also a believer that Reddit's going to get added into the S&P 500 this year. My own prediction doesn't matter, but I think they're going to add into the S&P 500. If you were to buy 1K in ETFs, what would you buy? I would just buy the VOO. Just the S&P 500. Most investors and institutions, hedge funds actually cannot beat and cannot outperform the S&P 500. So if you can't beat it, at least own it as a little bit percent of your portfolio, and you'll thank me for that. Ideally, you want this as the backbone of your portfolio, but if you like stock picking and stuff and you're good at it, at least own a little bit of it, like 10% of your portfolio, because it will outperform, at one point sometime, and you won't feel left out when you own it. No financial advisor would be upset for saying you should buy more of the S&P 500. It's just, you can't beat it. It does 8% a year on average. All right, let's see here. Hey, America Velas, thank you. I'm trying to get into this. I'm a beginner. Yeah, your future self will thank you if you're looking to get into stocks. I just like to buy high quality, great companies. Invest in what you use. I own almost all of these are like S&P 500 companies, or actually all these are except for one. McDonald's, Google, Meta, Constellation Energy, Coca-Cola, Amazon, Ferrari. Like I own a lot of popular companies, and I don't just own them because they're popular. I own them because they have great fundamentals and they have great shareholder tactics. Like they pay dividends and do share buybacks, which force the stock to go up. I own Progressive too, the insurance company. Zoom hasn't been a good investment, but I own Zoom, AbbVie. I do like AbbVie is pretty good here. SoFi. So, I said I'd get to SoFi. He said SoFi again. My bad. You know what? Let me do SoFi for you. So they just reported earnings too. I'll be quick about this one. I'm a big fan of SoFi. Microsoft, hey, we just looked at Microsoft, Jackson, but if you give me a couple minutes, remind me and I'll for sure look at that. No way, dude. He gifted like 30 roses. Dude, Jackson, I appreciate that. Definitely remind me to get to Microsoft. I have great things to say about Microsoft. I'll say that. Everything, it's a steal of a deal. So here's SoFi right here. A lot of people kind of think this one's a meme stock, but this company is no meme. They have one of the most incredible growth stories I've ever seen. And I'm a shareholder, so I'm totally biased. But if you're a shareholder of SoFi, the metric you want to watch here is their financial services revenue specifically, because this is what's leading to their high multiple and stock price appreciation. It's recently fallen, but before today, I mean, is this financial services growth rate in the middle here. It grew 76% after 101, after 141, after 300. Like these growth rates, no analyst expected this. It just hits a new record every year, every quarter. Like there is no red, and no analyst expected it to be that growthy. So that's why they've been beating on every metric. Like they beat on revenue, they beat on EPS, which is net income. They're making a couple hundred mil in net income every quarter. So that's why I think people are really starting to take SoFi serious. But even though SoFi's on this dip right here, they're not super cheap, and I wouldn't go crazy, but I'd certainly start a small nibble. Like they're still at a 32 forward PE, but I think a company with these sort of growth rates, like how's the lending revenue growing? It's at a record up 25. Like I do believe they deserve like a high forward PE like that. They deserve a high multiple. So that's one I definitely put on your watch list if you haven't heard of SoFi. But I wouldn't go crazy in that one. Like I only own like $500 of it. I wouldn't go crazy in SoFi, but it's a nice one to like, you keep it as a small position, or, you still have it as a position as opposed to just not owning it at all. You have it as a position, but as a small one. Hey, YouTube agent, what's up, man? Hope you're having a great day. Yeah. Let me go ahead and do Microsoft for this guy. Microsoft, I have nothing bad to say. I'm actually shocked at how cheap Microsoft is. Like they're not falling on some super bad numbers. They're just falling because all of software is struggling. Like they're so cheap. Like they should not be this cheap. I've never seen this. Microsoft's at a 22 forward PE. I'm saying this, if you buy Microsoft right now at current prices, I think you're going to get 8 to 10% of your money back for the rest of the time on average at current prices if you just buy it here. And even though if this probably isn't the permanent bottom, like maybe it could fall another 5-10%, but the risk reward looks very good. Like I don't think it's going below this 356 level. I don't think it's going to make a lower low. It's going to make a higher low. So, or that's my own opinion. Like I really do, I could not see Microsoft going in like a high teen multiple. Like it's going to probably bottom at like a 21 forward PE or something. Like I really don't see them going cheaper. And they have great businesses, their software business, which is, OneDrive, Excel, all that does over 120 billion of annual revenue for them. This is updated full year 2025 did 120 billion. And that's just one business. They also have their intelligent cloud, their Azure cloud. It took 1% market share away from AWS. It does also over 100 billion of annual revenue. So, and you get a dividend, a near 1% dividend. They do share buybacks. They invest in the future. So no complaints on Microsoft. It really is a great one to just buy, never sell. And it's so safe. It's like the third, fourth largest holding in the S&P 500. So if you don't own the S&P 500, why not own? It's like third largest holding that leads to a lot of its gains. Why not, right? So I actually own a lot of the Mag 7. I own Amazon, Google, Meta. I actually really might buy Microsoft. That's the next one I need to do. So thanks again, Jackson. You get like another 10 roses, Dan. I appreciate you. So Matt actually said Walmart. Yo. So this one's a great example of like a boring company just with stellar returns. Like this one's, I think, like crushed the S&P 500. It's outperformed it by a lot. And they're actually, these past 2 weeks have been super painful for a lot of stocks. Software stocks down crazy, crypto's down crazy. But boring Walmart, they're almost seen as like recession proof. Like actually in a recession, like people go to Walmart more, and they're at an all-time high, and they're like the best grocery store to own besides like Amazon and Walmart are the best. Because like think about Target, for example, or even like a Sprouts Farmers Market, unfortunately, like they don't have the online presence. Walmart also has copied Costco's successful business model. They're actually beating Costco now because anything you can get on what's it called? Sam's Club, you can order online and it'll deliver it to your door. So Walmart has a great online presence that their competitors don't. That being said, Walmart's extremely expensive at a 45 forward PE. I mean, this makes Microsoft look like a steal. So yeah, they're kind of recession proof. You don't have to worry about Walmart. They just this is their after-tax net income. Just every quarter, 5 to 7 billion of real net income a quarter, and you get a 0.7% dividend yield. I wouldn't buy it at all-time highs, but actually in 2008, in the 2008 dip, stock market dip, McDonald's and Walmart were the two best performing stocks in the S&P 500. So they're kind of resilient, and it kind of shows because this past 2 weeks, stocks have been tanking, but not Walmart. Same with McDonald's. McDonald's is at an all-time high today as well, which I noticed too. So Walmart, McDonald's, these two, I own McDonald's. They've done great. McDonald's at an all-time high. I'm up 15%, like just in a blink of an eye. I didn't expect that. I just checked it one day. I'm like, wow. I think McDonald's will give you just 7% of your money back a year. Is the QQQ too risky for a long term? No, absolutely not. QQQ, this has historically outperformed the S&P 500 because it's more tech heavy. Because Nvidia in this is 8.3% of it, but in the S&P 500, Nvidia is like 5 or 6%. So yeah, it's just a more tech heavy. And there's only 100 holdings. It's the Nasdaq 100. So like Walmart just got added into here. Yeah, there's Walmart right there. Walmart's 3.39% of this. So yeah, CEG's in here. So great ETF. Should get 8 to potentially 10% of your money back a year on average with QQQ. And they just lowered their expense ratio fee. I used to always recommend QQQM, but now the expense ratios are pretty similar. QQQ and QQQM are pretty close. They actually lowered willingly, like maybe, I don't know if they got forced into it, but they just lowered their expense ratio fee. Saves you money every year. Sorry if I'm missing some stocks here. Something said TTMI stock. So, this one's on my watch list. I actually forget about this stock. Let's look into them again. So they're up basically at an all-time high today. Let's see if we can figure out why the stock has done so well. So commercial and aerospace and defense. So they're like an aerospace and defense company. So their aerospace business is up 20%. Commercial side's up 25%. So this is great. So if we go to the revenue's up 19% year over year. After grew 15%. So they're on a streak of growth and net income too. They made 50 mil in net income, up 880% year over year. So they really have grown all their metrics here, and it beat expectations. Let's see EPS. Slightly missed this quarter, but anyway, good balance sheet. What does this company actually do? Let me check there. Electronic components, printed circuit boards and RFID components, 5 fabrication plants. So where's the revenue come from? US is 50% of the revenue. So 40% of its other. Anyway, yeah, the expectations are good. Revenue is going to go from 668 to 822. So expectations are up and to the right. They're probably expensive here though. Yeah, well, not crazy. Yeah. The PE, let me actually pull that up over here because it looks better. The PE right now is a 60, but the forward PE is a 37. So that's going down a good chunk, which is good to see. All right. Under Armour went up 17% today. Yeah, RIP Under Armour. They were at like an all-time low right there. Lexi Rex, I need assistance and I want to trade. Well, I wish I could help you out there. I don't. But yeah, actually, that's a good point for me to say this. Watch out for people impersonating me on. I don't sell anything. I have no course book, WhatsApp. I don't coach. I literally sell nothing. I'm telling you, give my opinion. There's no way I could really help you more. But if you want to support me, the best way to is just watch the streams. Watch my YouTube videos. I'm streaming on YouTube too if you want to watch it from there. That's the best way to support me. Watch the stream from YouTube. I'm trying to build on my channel there. It's called Nathan Roberts, also in the link tree in my bio. Just type into YouTube Nathan Roberts. So Woke said Roblox stock. Kathy Wood owns that stock. That's that that video game company. I believe they were super volatile. Did they report earnings? No, so they haven't reported earnings. But wow. Look at that. They gapped down on earnings to $110, and now they've fallen all the way down to $67 a share. Here's why, sadly, I cannot buy Roblox stock, and I can't really recommend it too much. It's because simply the net income losses. It's just too unsustainable for me to really trust. Like, they lose a lot of money, a couple hundred mil, 200 mil a quarter. Wait, okay, wait. All right, I'm chilling. Okay. The mic's good. All right, but yeah, they make literally 200, or they lose 200 to 250 mil in net income a quarter just for all of the time. Like, we can just zoom out here. Like, all this company does is just burn through a lot of net income. Whenever you lose net income, whenever you have a bunch of debt and you lose net income, you can't pay off anything. You can't pay your bills. You're accumulating losses. So they have a super leveraged balance sheet, a lot of liabilities, nearly the same amount as their total assets. So they're losing all this money, but there is some good news here. Some impressive metrics like their daily active users, their daily active users last quarter was 111 million. In this quarter, it's 151 million. So I don't know what happened just quarter over quarter for it to grow 36%. But something happened. I don't know if it's AI bots, but yeah, their daily active users are growing a lot. But the scary part is this net income losses. And it's because of their stock-based comp. Buffett stocks do best. Coca-Cola, Walmart. Yeah, you're right. We can actually see the Buffett portfolio right here. Warren Buffett's holdings, actually his largest holding is Apple, then some really boring names like an American Express, a bank, a Bank of America, a Coca-Cola, that's 10% of his portfolio. Chevron is 7%, Oxy another 3, Moody's, Chubb, and Google. He just bought Google for the first time. It's 1.8% of his portfolio. We can actually see it. Go to new here. His literally most recent purchase is Google stock. So pretty interesting there. All right. Hey, what up, Looney? Good to see ya. Shout out member Looney. Um, where do we? Hey, what up, Logan? Um, DY stock. What is DY? Dicom Industries. Well, they're at an all-time high. They've done phenomenal. Wow. What do they do? Maybe an industrial company? Because those have been crushing it from the whole CapEx spend. Yeah. Engineering, construction, and maintenance and installation services to telecom providers, underground facilities, various utility companies. So yeah, electrical workers, they're in a lot of demand right now just from AI, taking up all the supply for these workers are limited and the demand is so high. So the margins are going up. So the revenue's up 14 and the net income's up by 52. They must have just reported good numbers. Yeah, they beat on revenue by 520 mil. They beat on EPS for the past 3 quarters by a good chunk. So no wonder they're gapping up exactly like they big gap up on or let me actually see the gap there. Yeah, big gap up that day and this day as well. So no wonder because they're beating so heavily on their net income and on their bottom line. And it's not just like a net income one-time adjustment like it really is. The EBIT, the earnings before interest taxes, it just beats on every quarter. So interesting there. They probably don't buy it at all-time highs, but congrats if you own it. What app is that? Yeah, hey, if you want to get this app I'm on, it's Moomoo. It's actually a brokerage. So if you want to get it's actually in the link tree in my bio, the very first link there. Apple is my largest holding. Dang, top, nice man. Apple's super quality. They're actually look at that. They've done great this past 2 weeks here because they're actually being rewarded for not spending so much on AI. Meta, Amazon, Google, they just announced they're spending like 150 and $200 billion just in 2026 on CapEx. And Apple here is spending nothing actually, or barely any. Oh, wait, there we go. Whoa, I didn't even realize. Look at this free cash flow metric right here. The FCF this quarter, they had 51 billion of free cash, just in one quarter, 50 billion of free cash flow. So the net income's a little lower. It's at 42 billion, but still a phenomenal quarter. This is the crazy part. Apple prints money. This is the after-tax number. So after tax, they made 42 bill. The before tax was 50 billion. So they really did keep 42 billion in net income. And what is Apple doing with 42 billion in net income since, Apple doesn't spend on AI? Well, they pay a dividend. The dividend only cost on the top right there, 3.9 billion. So there's a significant amount of room for them to raise their dividend if they wanted to, but they're choosing not to. They're instead choosing to spend it all on share buybacks. They have the largest share buyback program of any company on earth. They spend 25 billion a quarter. So they spend 100 billion a year. If you kind of zoom out here, see how it says 20 billion? It's always these crazy high numbers. And all the buybacks that they did, way back in 2021, these 20 billions they spent, is so accretive to right now stock price because the stock price was way, way, way lower. So they literally bought back 7% of the company at 150. Then they bought back another 10% at 200. And it's just so great to right now stock price. So that's why the stock never goes down. They just buy it back with all their net income that they make. And they do make a lot of net income and free cash flow. As we just saw, 51 bill of free cash, net income's 42 bill. So impressive numbers from Apple. So they have their iPhone revenue. The iPhone revenue saw a boom up 23% year over year from China demand, the new AI features or whatever. But the most best part about Apple is actually their services business. So whenever you go spend $100 or spend any amount of money, if you go spend $10, they keep 30% of the transaction. So they keep $3 of the $10 transaction. Is they call it a developer fee, and it's basically all high margin royalty income that comes for Apple. So they sell you the hardware for a great profit, but then they also collect the services recurring revenue every time you do a transaction. They're starting to make their own smartphone chip. They actually have an 18% smartphone chip market share. Yeah, we can see the difference of the gross margins of their hardware versus software, smartphone shipments. So anyway, yeah, nothing to complain about on Apple, except probably the valuation. I wouldn't buy it today, at a 32 forward PE, but as a stock, you just never sell. And a lot of people are locked in the Apple ecosystem. They they have the AirPods and the Mac and the phone, and they just love Apple. All right. Powell's been killing it. I bought zero point 0.5 shares around 335. Yeah, dude, Powell Industries hit an all-time high today. Like this chart, it almost doesn't look real. Like it's so good. They just reported earnings too. Incredible numbers from Powell Industries. Hey, try not to spam there. Someone said BURU stock. Yeah, hey, we're not going to cover this one. This is some meme micro cap stock. Yeah, if you look it's worth 16 cents a share. If you look in the top right, the market cap, this whole company is worth $69 million. I mean, we just don't cover they're basically a zero price to go bankrupt. Let's see if we can figure out why. It always makes sense from the numbers. Oh, and it's so obvious. I mean, think about this just from pure logic. Here's why you never buy these kind of stocks. They're almost certainly just going to continue to go lower, lower, lower. If you look in the top right, the whole company's worth $69 million. They lost just this quarter $22 million. Like, let's say you buy the whole company. You buy the whole company at this valuation for $70 million. You just bought an asset that lost $22 million just this quarter, which is 20% of your money. Then another $12 million, then $16 million, $11 million. And look at the asset versus liabilities. They have $67 million of debt to pay. They have the same amount of debts as market cap and no cash. No assets. The losses are worsening, and they have no revenue too. Revenue zero now. They have absolutely no revenue. So hopefully that was somewhat helpful, where you can kind of learn what to avoid. So Looney said progressive stop. I step away that you would buy this now. Oh hey, I'm up. I'm the reason why the market's up. So what up, Looney? Let's do progressive. I do own this stock. They're kind of at this new 52-week low level. That's pretty crazy. ATH does mean all-time high. Yes, sir. Hey, Steph said like the video. Hey, thanks. Yeah, if you want, you can hit the like. I stream every day. I sell nothing. So here's progressive. I do own this one, an insurance company. These insurance stocks always trade cheap. So look at that. On the right, a 12 forward PE. That's very fair in my opinion. Obviously, we kind of know what they do, insurance. So their commercial lines here, which is most of their revenue, that's growing great. Like look at these year-over-year growth rates in the middle. It's up 16, after grew 34, after grew 23. So that looks great. So it's not just the revenue that's growing, because that looks fantastic. I mean, no wonder the stock has done so well. I mean, if we kind of zoom out, it's been struggling this past couple of days here, but since 2019, it's done so phenomenal. I can start to see why, because the fundamentals are aligned with that. So it's not just the revenue that's growing like a beast, but check out the net income. They're the most profitable they've ever been. This just looks great. So literally, oops, I always mess up when I zoom in here. Every quarter, like they're literally making $2.5 to $3 billion of real net income a quarter. That's why I like progressive. And they do this. This is really cool. They do a yearly special dividend. So if we look right here at the kind of top here, they pay 10 cents a quarter, 10 cents, 10 cents, 10 cents, but they just paid a $13 special dividend. So it's added into this yearly here thing. So their payout ratio isn't a 72, and the yield is not a 6.8% dividend yield. That's annualizing that that's including this $13.50 dividend. They kind of change it every year based off how much net income that they make. And this year's net income, obviously, these year-over-year growth rates are just incredible. It's up 25, after grew 20, after grew 140, after grew whatever. So it's a great dividend growth stock if you want to kind of diversify away into a safer kind of insurance industry. I don't know if this is going to outperform, the super tech-heavy S&P 500, but someone said, has no debt. Director just bought shares. Okay, let's check it out. Oh, very small company. Wow. Yeah, they're only worth $10 million. So just because they're so tiny, you got to just keep it as a small size position. It's hard to really trust anything meaningful in here. But they sell safety alarms, maybe some well, I know nowadays it's like to have a house and sell it and everything, you got to have working safety alarms. So it's kind of like this commodity that's always going to have reoccurring buys and stuff. It can't really be replaced by AI, or maybe it can. I don't know. But I don't know if this is true. This doesn't look good. The revenue just went to zero. Like the revenue is only 760,000. There's no analyst covering this company. So I don't know if that was real or whatnot, but no debt though, he said, which is good. But I'd be careful with that one. The sales, I don't know if the sales are there. All right. Nebius or AMD? All right, let's do Nebius. Or well, should we do AMD? Let's do AMD. So because AMD, I lost a lot of money. Well, they went from 260 to 195. They just reported earnings and they gave a little bit of weak guidance, I think was the main reason they fell. But the main reason I guess they fell was just the whole market. So they just completed their ZT Systems acquisitions and secures an OpenAI GPU supply agreement. So for 6 gigawatts, that's pretty good. Let's check out this right here. Wait, AMD and Intel notified Chinese customers of server CPU supply shortages. AMD CEO states 8 of 10 largest AI companies used Instinct chip for production workloads. It discloses 390 million China sales from inventory excludes. Okay, well, whatever. Here was their actual earnings report versus what the analysts expected. They beat, the orange lines, what the analysts really expected them to do. They beat on everything. They beat on revenue. They beat on EPS and on EBIT. So it's like they had great numbers. Their data center revenue specifically. Check out this year-over-year growth rate, up 39%. After grew 69, and that's after grew 38. So that's a nice little growth streak there. Their client revenue, that's up, 50% year over year. So that looks good. And it was just a record profits. Like if you just go to their net income right here, that's what you want to see. They're still a little expensive, even at, even with this little dip that they have, they're still a little expensive. Like I wouldn't really load the boat. Like if I wanted AMD as 5% of my portfolio, I wouldn't make it 5% of my portfolio on this current price, but I would maybe make it 1% or something. All right. And I do own AMD, full disclosure, so I might be biased on that one right there. All right. I think it's a dead cat bounce. We can only trade. Today potentially, knock on wood, or I think, actually, let me just say something about yesterday. Yesterday might have been the bottom, Oh, Innodata. Yeah, Eric, my bad there. Thanks for reminding me. Innodata stock. I am so bullish on this company. And I'll get to APLD too. And what's up, Nick? I appreciate you, man. Yes, sir. Innodata just got a huge contract with Palantir and the government. So, Innodata secures AI contracts with Palantir Technologies and U.S. Missile Defense Agency. Just what I was saying, yeah. So they're like one of 2 companies that the government's using to train. They're like, this is a data labeling AI company. Basically like Scale AI that Meta just acquired, and Meta acquired them or bought 50% of them, and now like they're off the market. So it's like just for Meta to use. So this actually helps out Innodata. This is simply why I love Innodata. All that aside. Oh yeah. So they just have a huge contract deal with Palantir. Their largest customers right now, I believe, is Google, Meta, Microsoft, Amazon currently. Like 5 of the Magnificent 7 are customers. They're beating on every metric every quarter. They expected 59, they did 62. And check out what analysts are expecting in 2 quarters. They're expecting 72 million. So it's going to go from 58 to 72 million. That's going to be a great growth rate to the revenue. And they're already net income positive. They had a one-time adjustment on Q3, so it wasn't actually 17 million that quarter, but it's actually is positive, the growth rate year over year. But anyway, this company's already making money. So it's not like some speculative company that's losing money. Like they're making net income every quarter. The revenue's growing. They have no net debt. They're fortifying their balance sheet. And this new U.S. defense contract and the Palantir contract, I'm just so bullish to see what happens with that in future guidance of their next earnings report. So at a 43 forward PE, I think it's very fair because they just went basically net income positive. So I do own Innodata as a very small position. That's one, you want to own, and if you choose it as a very small size position, you don't make it a meaningful size position. You keep it small. But I'm so bullish on that one after those two news. APLD. I think Nvidia owns this stock as well. Um, I think I don't remember. So APLD, is this one of the? Okay, so yeah, this is another one of the data center companies. So this is kind of like a smaller core weave. I wonder if Nvidia is increasing their stake over here. No, Nvidia just bought a bunch of CoreWeave stocks. So basically, this company, they have nothing too proprietary right here. They basically just own a bunch of GPUs in the data center, and right now these GPUs are in such demand. There's like a shortage that they're actually renting out the capacity to hosting companies. So basically, cloud companies, they rent out the GPUs. Yeah. And so there's just a lot of growth expected here. Look at this quarter specifically. This is why the stock gapped up on earnings day so much. Analysts expected 81 million. They did 126. I mean, that's just an incredible beat. Like, no wonder the stock has done so good because they're beating on expectations, but they are still losing money. Well, not that much. Or how much are they losing? Yeah, only 15 million this quarter. I guess they are fixing their losses, but yeah, that's one of the you want to be careful with that one. I'm not super bullish on them in the long run just because the whole depreciation thesis on that one, but yeah. All right, let's see. What up, Celerate and Zero? Um Steven said ALMU. What's ALMU? Illumina. Very small one again. One they're worth $276 million. So just beware that that's a very small market cap. Um, let's see what they do though. Do they have revenue? They do, but it's very low. Only 1 million or 1.4 million this quarter. So, we're talking about a company that does 5 million of revenue a year and they have 14 employees. So just beware, like that's just like such a small number. They have a good balance sheet though. I wonder if that's from stock issuance. So yeah, they've diluted you, but all this dilution fortified their balance sheet. They have 40 million of cash. So that does put them in a good position because they're only losing like 1 million a quarter or maybe 2 million a quarter. So it's not like there's super high chance of bankruptcy yet, but I don't love what I see there. But the revenue did grow year over year. We want to see it grow a lot more from 1 million. Thoughts on MSTR? Started a position under $10. So basically, this is just leverage Bitcoin. I kind of, in the long run, like if we're being honest, in the long run, I prefer actual Bitcoin over MicroStrategy any day. But yeah, basically what this company does is it issues shares. If you go to the cash from financing activities right here, whenever this number is positive, that means they either issued debt or diluted you by issuing shares. And look at Q4, 4 quarters ago, they issued $18 billion worth of shares. And on that Q4, they bought $18 billion worth of Bitcoin. So that's how their balance sheet, literally year over year, their balance sheet went from, 7 billion of assets to 70 billion because they every quarter diluted you by 20 billion, 8 billion, 8 billion, 5 billion, and they just buy Bitcoin with that. And then the Bitcoin goes up. But I think as of yesterday, well, it's recovered now. They their average price per Bitcoin went negative. Strategy reports net loss of 12 billion on unrealized digital assets. Well, that's strategy to launch Bitcoin security program addressing quantum computing risk. Okay, well, I click on the news and it just all says bearish right here. Is there anything bullish? No bullish news. Wow. Peter Schiff questions sustainability of strategies. 11% Bitcoin backed dividend. Okay. Anyway, let's see. Yeah, that's kind of just what I wanted to say here. I like Bitcoin more in the long run than this one because this is basically this company just buys Bitcoin and it kind of props up the price of Bitcoin. So the Bitcoin will bottom the day MicroStrategy goes bankrupt if they ever do that. But GLW has been going crazy. Yeah, this is Corning right here. This is the people who make like Gorilla Glass for Apple, and they're a fiber optics play. So they actually signed a really big deal with Meta worth up to $6 billion. Yeah. So they got a big deal with Meta. And that's also sending Amphenol stock up too. This one's done a little better. But that deal sent Amphenol stock up a bunch. So yeah, optical communications, this is their main growth driver. It's up 32% year over year. The demand is really back for their margins. So if we go right here to revenue, the revenue grew by 20%. So the revenue's up 20 and the profits are up by 71, which means, margin expansion. Gross margins are up by 4% after it grew 12%, after it grew 8%. So their margins, gross margins and net margins are all up really good, but expensive, really expensive at a 40 forward PE on the right there. If you like GLW, you'll also like Amphenol stock. And I actually just bought a share of them yesterday. Bought a share of them at $128. And they're up, of course, because everything's up on the day. Um, you mentioned VOO today for a 1K investment that doesn't get much due to their price. Or what do you mean price? The price is irrelevant because you can buy like fractional shares, but I recommend the S&P 500 because on average, you can't beat the S&P 500 in the long run. It does 8 to 10%. This isn't get rich quick. You buy this to this whole point of investing is to slowly build and preserve wealth. You're not trying to get rich by Tuesday, get rich tomorrow. You just want to get like 10% of your money back on average a year, which is way more than inflation. You don't want to take a crazy amount of risk. So that's why I like the S&P 500. Own the S&P 500 and then buy some stocks you know and love on top of that. Like buy that as the backbone, then buy like your favorite companies like Microsoft. Actually Microsoft's a steal. I think Microsoft's really good. Meta's really good right now. They're at like their before earnings price. Amazon, Microsoft, and Meta, those three I think are really good. Yeah, I'm down bad on Amazon today. Check that out. They're down 7.2%. But their high CapEx spend is sending up all my other stocks like Powell Industries. Huge beneficiary of that. Same with Comfort Systems. They're at an all-time high today. I just can't believe the rallies on some of these names. All right, let's look at some more. SIGA stock, low PE, strong balance sheet. What is this stock? So like Sega Technologies. So yikes, this stock is the same price that it was back in 2018. So the stock has not done too well historically. Company sales of oral and IV of TPOXX. So they sell a prescription. And it's really like stagnant. Like some quarters it's like really high, but then the other quarters it's like really low. Like this quarter I don't like the revenue is literally only 2.6 million. That's not great, but last quarter it looks great because it was 81 million, but then it was only 7 mil, then 81 mil, so it's kind of choppy on the revenue. What about the profits? So yeah, actually they do make a lot of good profits whenever they have those good quarters. So what's the forward PE here? So actually they really do. You don't look at the current PE, or there are analysts covering this one. They're saying forward PE is a 17.8. So not as cheap as the 6.5, but still that's a pretty, at least this company's averaging actual money every year. All right, let me pull up the balance sheet. Oh, I think I might have just disconnected my phone from my screencasting software here. There we go. I fixed it. Sorry about that if it froze for a second. But yeah, look at this great balance sheet. One thing that I do like about this stock, takes a lot of risk off the table, is the fact that they have 171 mil of cash and no debt. So it's a debt-free company. What was the market cap again? Yeah, 430 million. So what we're looking at is the whole company's worth 430 million, and 170 million is just their cash on hand with no debt. So that takes a lot of risk off the table. Let me look at this on an annual basis. So this company does have like a 30-40% net margin. So this is one thing to watch, is the annual sales growth. This is from 2024, so it hasn't loaded in 2025, but from 2023 to 2024, kind of 0.8% growth. It was negative 17 that one year, and dang, 2018 it was 500 million. But yeah, and then the profits on this every year. So yeah, here's the revenue, 138 mil. And for the full year, they netted 60 mil, 68 mil. So yeah, the company makes on average, 60 mil of net income a year, 480 mil market cap with 178 mil of cash. I can see why you might like that one, but it's all dependent on their one single product. Maybe there's a lot of risk. Who knows? I keep the allocation of that one low, but it's one of the better ones out of all the 400 mil market cap ones. I love that the net cash and stuff. Hey, what up, OLP Papa? Thanks for that gift there. Hope you're doing well today. Dead cap bounce pretty much. DHR stock. I hope, I really hope this was the real bottom. You know what I mean? Like, I think there's actually a pretty decent chance that maybe yesterday was like the local bottom. Like, we might be good for a while. Who knows what'll happen in a couple months, but I think like that was like some calls got made by some higher ups, or something happened, uh, to stop the panic. But it's DHR stock, let's check it out. Donna here. So they're $153 billion company. That's a big market cap. So they do diagnostics, biotechnology, and life sciences. So I like how diversified that it is. Like 3 big chunks of revenue here. So very diversified. Very diversified. I do like to see that. The U.S. Okay, so here's where the revenue comes from, like geographically. The U.S. is 41% of their total revenue, and the bottom line is pretty good. They easily make 500 mil to $1 billion in net income. It looks like that is on a decline since 2021. So they were making a lot of net income in 2021. So that might be like kind of why the stock, like if we zoom out, is kind of flat. Like if we zoom out all the way to 2021, the stock is lower than it was in 2021, or the same price really that it was in 2021. I can kind of see why, because the profits haven't grown too much, but they're still making a lot of net income, like $1 billion a quarter. Here's a Moomoo post about it. Let's see here. What are they in? So yeah, there's your weight loss plays in the top right. Eli Lilly, Novo Nordisk, and they're saying CRO play is like a life sciences, I think. TMO and Donna here. Well, there you go. You can screenshot that if you want. Yeah, I love AbbVie. Johnson & Johnson's a good oncology play. All right. Let's look at some more stocks here. KLA or ASML? Which one do you like more? Hey, what up? Hey, it's Nanny. What's up? It said Ethereum. Yeah, hey. I think you're talking about just ETH's Ethereum. I wish I could give you more thoughts on this one because, it's crypto. I don't actually own any crypto, but the kind of unique thing about Ethereum and Bitcoin is that they're catalyst free. Like they don't report earnings. Like there is no quarterly earnings report. They can't miss on net income, can't miss on net margins, so that's kind of interesting. And a cool thing about Ethereum, it's kind of like a crypto that you can earn dividends off of, because I heard you can like stake your Ethereum. Like you can't do that with Bitcoin. So if I was going to buy some sort of crypto, I would stick with Bitcoin and Ethereum in like the top 10, like maybe like XRP or something. But I would strongly advise to stay away from a lot of those micro cap coins, those meme coins. I'd stick with the top market cap cryptos, or just, buy the crypto picks and shovel beneficiary plays like a Webull stock or a Robinhood, where every time someone, or Coinbase, where someone does a transaction, they just collect a high margin fee. So Robinhood stock's a nice proxy, a way to get exposure to crypto. So someone said, who was that? Travis said, KLA or ASML, which one do you like more? I really like ASML. I don't remember. I think KLA is KLA Corp. I forget that one. Hey, what up? Cadence said Celsius. Yo, I'll try and get to that one too. I have a few I want to get to here. SanDisk went crazy. Yo, we got to get to SanDisk. Yeah, that's that memory shortage play. The memory shortage is crazy right now. Oh, I don't own any crypto. Oh, hey, nice. But Ethereum, honestly, it's interesting because it is really cheap. I know Tom Lee has a like BMNR, kind of like an Ethereum proxy. So here's ASML. This is the lithography company. It's actually the chip making like machines. They make Taiwan Semiconductor buys these machines from ASML that make NVIDIA GPUs. If you didn't know, NVIDIA just designs the GPUs. Taiwan Semiconductor actually makes them, and that's supplied from ASML. So you can kind of see the circle here. They're a fantastic company. They print money. They're a European company, so we did convert the currency from euros to USD. They easily make like $3 billion or 2.5 to 3 billion in net income a quarter. And if you look at these year-over-year growth rates, like it's all higher than it was the previous year. So they've really no wonder this stock has just been up and to the right, because the profits on average are up and to the right. These are insane growth rates to their just, net income, after tax net income. They also pay dividends. You get a 0.55% dividend, but the dividend changes every quarter. based off how much they make. Like this quarter was $3.17. Last quarter was $1.18 or $1.80, $1.86, $1.84, $2. So on average, yearly they do grow it. So yeah, I would not buy them really right now at current prices at all-time highs, but I can see why the stock has done so well. And Nvidia chips are only in more demand. Oh yeah, let me do SanDisk really quickly because I saw that one. Um, I do not care about market bottoms. I just keep buying. Yo, me too. Because if you're buying something like and have this long term mindset, like I plan to just buy a high quality company, even if it could go lower. I have a long term mindset. Who cares if I miss the bottom by 5 or 10%? It'll be nothing if my long term thesis is right. And in 10 to 15 years, it'll be a multi bagger, a big compounder that'll outperform the S&P. So here's SanDisk right here. Yeah, big memory shortage play. I think the CEO just came out and said like the shortage is to persist till 2028. I want to see if I can pull up that weekly news. If it'll load here in the next couple of seconds, we'll get it. But I can see why this stock has done so well. It's pricing in the future growth. And the future growth it's going to have is insane. So let's see. SanDisk extends joint venture or 672 margin. So anyway, here's the crazy part. Here's the net income right now, or the EPS. They had that one quarter skews the whole thing. But basically, the company's going like this is their EPS. They were lucky to make like $1 a quarter. In this quarter, it was $5. Like, it was an insane beat. And not just this quarter. Basically, you just annualized the future EPS. That's how the forward PE, while the stock may look, I'm wording this so weird. I apologize. Why the stock is really looks really expensive. It's at an all-time high. The forward PE tells us it's not crazy expensive in terms of next year's earnings. The forward PE is a 9, which means they're trading at 9 times next year's net income. When you start to look at it that way, I feel like you could honestly stretch up to like a 12 or a 13 time next year's net income. Send this up another 30%. But yeah, check out the EPS projections. This quarter was $5.15. Next quarter, it's going to be 13. It doesn't stop there. It's going to go from 13 to 17. So it's almost going to be nearly $20 of EPS a quarter, which is, 80 a year. And the stock price is $600, in a perfect world. So that's why the forward PE is a 9. And that's why it's not, some crazy expensive company. I still would be very careful with that one, buying at today's prices. Like I keep the allocation to that one low. But they're like the best performing stock in the S&P 500. Last year, and I think still for this year. If I just bought the S&P, I would have had 2x what I have. Many so-called hot stocks I bought over the past 45 years no longer exist. Yeah, that's why, it's still great to stock pick, but if you have the S&P 500 as like the backbone of your portfolio or keep it as a decent chunk, you won't feel bad when it outperforms. So yeah, that's why I always recommend, because most retail investors and even hedge funds, can't beat the S&P 500. So that's why, if you can't beat it, just own it at least a little bit. And your future self, like you won't, that's not bad advice, I don't think. Like if you have a financial advisor, he won't call you crazy for buying the S&P 500, which historically gives you 8% of your money back a year. Like the goal isn't to get rich quick, it's to slowly build and preserve wealth and just get that 10% plus a year, and then you snowball it. Like you get 10% of your money back a year, then you reinvest the profits, you reinvest the dividends, and you add more. It just builds quickly. So here's Celsius right here. I'll kind of be quick about this one. They have a 23% energy drink market share. If you've heard of Celsius, Alani, and Rockstar Energy, this company owns all 3 of those brands. They recently acquired Alani. So if we go to the cash from investing activities, that's this acquisition last quarter for $1.27 billion. They gave them shares too. So Alani owns 8.7% of the company, but they own Alani, but that's just the holding like investors. But that's why they got all this leverage. They used to have no debt. They used to be in my debt-free watches, but then they had to acquire some debt to do this. But anyway, that acquisition is leading to this triple-digit, year-over-year growth rate. Like, how did the revenue, jump up so dramatically? Well, it was inorganic because of Alani. And if I don't know, Alani is really popular right now in the US. So, that's why in total they have a 23% market share. And look at the profits. This is the best part as well. So the revenue's at a record, obviously, from the acquisition, but so's the profits. This quarter was a record profitability quarter. They made 166 million. What were they, like 150 million? This is the before tax number. And they just moved their distribution, basically bottling, to Pepsi. And they moved the Alani one too. They had a one-time little structuring charge, but it's going to lower their input cost, and their margins are going to go up in the future. And because of that as well, Pepsi, I forgot to mention this, Pepsi gave them Rockstar Beverage in exchange for a big stake in the company. So Pepsi wanted to buy Celsius. So Pepsi owns like 6% of all the shares. All right. WDC. Hey, what's up, man? Yeah, let's do that one. Do you know why Alphabet with 48% cloud revenue fell after earnings? Huge capex. Well, the Google, let me just be so quick about this. Google acquired, also it's kind of seen their cash investing activities. They spent $51 billion on investments this quarter. They spent $10 billion of that was them buying Wiz. They bought a cybersecurity company called Wiz. And that whole acquisition, all the revenue goes under the Google Cloud. So some of this was inorganic growth from Wiz, but the actual Google Cloud, even excluding it, it didn't grow 47%, but it still grew incredibly. But Google, they fell a little bit. It doesn't matter. Like Google's a great company. It only fell a little bit because it's pricey. Okay, I'm a little behind here. WDC people are saying. I think this is another memory shortage company, I believe. So they're kind of like a SanDisk, but or maybe they're a little different. Let me actually see, but I'm pretty sure it's just another one of the data storage. Yeah, data storage solutions. So yeah, memory. All right, let's check it out. So let's see what the EPS projections are. So whoa, I can see why this stock has had such monster returns. It's simple. The analyst expected one thing. They expected $1.72 of EPS, and they did $4.70. And last quarter was a big beat too. And the expectations are up and to the right for everything. So I can totally see why that one. So they're probably cheap on a forward PE or something, or I don't know. Yeah, 28 forward PE. And this forward PE uses these orange numbers, and historically they beat like crazy on these orange numbers. So yeah, here's the net income. Yeah, record net income on this company. There you go. WDC. All right. Broadcom. Let me do Broadcom, and then, hey, are you still here? DSA. We'll do COTY. If you're still here, I got you. We'll try and do is Celsius no, Celsius is an energy drink. Yeah. Not that. So here's Broadcom right here. This is a TPU play. They huge software like VMware play. Oh, look at this. Alphabet introduces $185 billion AI infrastructure plan, boosting Broadcom's TPU partnership prospects. So yeah, estimating 85 to 90% market share of approximately 6 million TPUs. Wow. So they make the tensor processing units, with the Google program accounting for 80% of Broadcom's AI compute sales, according to Bank of America. So yeah, Broadcom will be a huge beneficiary of this whole CapEx spend from Amazon and Google, obviously. So they are expensive, even on the dip, a little expensive. If you look on the right here, they're at a 41 forward PE, but they deserve a 41 forward PE, and I'll get into why. Like, I think the PEG, price to earnings growth ratio, is pretty fair. But yeah, a lot of people know them for their semiconductor solutions. That's 60% of the revenue. It's growing very nicely. It's up 35% year over year. Actually, if you notice, the growth rate's like growing. It's up 35%, after grew 12, after grew 3. So the growth rate's growing. That's pretty insane. And then not just the semiconductor solutions, but they also have this infrastructure software. Check out that growth. So this is VMware. And, it used to be like 1.9 bill, then it just surged up with the whole AI demand. And it's up 19%, after grew 195, just continuing that growth. So impressive. So they deserve a high multiple. Plus they print money, like real profits, like free cash flow. They made $7.5 billion of free cash flow this quarter, and they made what was the net income here? They made $7.5 billion of net income this quarter too. So they really do just print and retain this money. So their net margin, actually, it's around like a 30 to 35% net margin on Broadcom, and that's going to grow over the years. And you get a dividend. It's like NVIDIA with the higher yield, a 0.71% dividend yield on Broadcom. I wouldn't go crazy yet at their current valuation, but they're super quality. And, with that Google CapEx guide is really bullish for them. All right. What's next here? Sean's been saying Etsy. Yeah, let's do Etsy stock. Etsy, I actually, weirdly, I like eBay better. It's actually a weird company, kind of niche-y, but this is like the most discretionary stock of all time, like super discretionary kind of company, like you're buying gifts or something, or a gift for yourself or a gift for someone else. Let's see what they're doing. Dang, they look like PayPal stock where they rallied up a bunch in 2021 and then they're just down bad ever since. They're the same price as nearly when they IPO'd in 2019. So let's figure out what happened here. They're honestly a cheap forward PE on the right. They're at a 19 forward PE. Which actually implies the valuation's pretty fair. Looks like the growth is just slowed down. Look at the past 4 quarters in a row, these year-over-year growth rates. So this might say something about the consumer, or maybe it's just an Etsy problem. But look at these year-over-year growth rates. Maybe they're getting taken over by like Shopify and the Shopify stores. I don't know. But these year-over-year growth rates at the bottom, they're positive, but they're low single digits, which means like inflation is beating this, like 2.3, 3%, 0.8, 1.1, 4%. So low single digit growth rates, not great. Plus they do have some leverage, more liabilities than they have assets. And luckily, they do make net, like if you average out the 4 quarters, they are making net income, but it's like they used to make a lot more higher average net income. So kind of the net income's going down. That means their margins are slightly going down as sales are slightly growing. I would just be careful, but it's really not the end of the world because they really are at a cheap kind of 19 forward PE. Weirdly, if you like them, you might also like eBay. It's actually done really good. Like, look at their stock. They've actually done really good these past couple weeks here or months. And they actually make a pretty good amount, 400 to 600 mil in net income a quarter. Sometimes they have some one-time adjustments, but like for the past couple of years, it's been just like 500 mil a quarter. And they mainly do buybacks with all that money. But I don't love them. I don't know about their I like Amazon the most. Amazon is like, could buy Pepsi last month at 136. It's almost at 170. Yeah, the food stocks have been booming. McDonald's is at an all-time high today. Coca-Cola is at an all-time high. And Pepsi's not at an all-time high, but it's had a phenomenal rally. I think Hershey's was up 12% yesterday. So these kind of defensive food companies with a dividend are actually doing good. And right now it's kind of tech sell-off. It almost seems like investors are flooding into these safety names. So PepsiCo, yeah, even if you buy the stock right now, you get in a dividend 3.4% of your money back every year just in a qualified dividend. And I love Pepsi's products, or a lot of their products, Frito-Lay, Funyuns, Cheetos, Purple Doritos, Gatorade. I love all their stuff. I really like Pepsi too. I'm trying. For some reason, I'm going blank here. They own so many other brands, but I just can't remember them right now. But I like Pepsi. That stock, I wouldn't buy it really too much at their current price, but I wouldn't. You wouldn't call you crazy. They have a bit of a high dividend payout ratio too, but I do trust Pepsi to keep their dividends safe. Coca-Cola is a good one too. Dang, Powell Industries. Whoa. That's an all-time high. That position just hit $7,000. I've never seen that before. That's crazy. Today, a lot of stocks are at an all-time high. My largest holding's at an all-time high, and my second largest holding. It's crazy. Sorry about that. Okay, let's look at some more here. Yo, what up, Rashawn? How's it going, man? Afternoon. Can you check out SS, please? Yeah, Roland, what's up? Or Rolando, SS. I actually typed in S. Oh, ticker S. It looked like 2 S's. Okay, Sentinel One. I believe Sentinel One might be a cybersecurity company. I can't remember, but let's actually go to their website and figure out what they do. But I'm pretty sure this is a cybersecurity stock. And unfortunately, the stock is pretty much at an all-time low. So I feel bad if you own this company. And I think it's because they lose a lot of money. Like if we zoom out, yeah, so look at this. Just for all of eternity with this company, as we can see, this company, ever since they IPO'd, have just lost a lot of money. Losing like, 60, well, that quarter was 200 mil. We'll just say they lose like 70 mil in net income a quarter. That's not great, but they do have good top line growth. Yeah, that's what you want to see. That's phenomenal. It's, hits a new record every quarter, but I think it's just maybe a problem with their bottom line, their net income. Let's go look at their website really quickly. I do want to say, it says cybersecurity. Here's their actual website. Don't just stop breaches. Make sure they never start. There we go. All right. Singularity Cloud, Purple AI. So I wonder if there's any. I should go to their investor presentation because that'll be great. So anyway, some sort of cybersecurity stock. Kind of cool. Unfortunately, that's a bad net income loss. I do love the whole cybersecurity industry, but we want to like the most quality cybersecurity play, if you're looking for maybe a bit of a higher quality one, is PANW, Palo Alto Networks. There's a CrowdStrike too, Cloudflare, but Cloudflare is really expensive. Like this is a subscription model company. This is PANW, Palo Alto Networks. Nancy Pelosi owns it as well. So hey, maybe that's your confirmation to buy. I don't own this one, but I would love to one day. Look at their subscription revenue right here. That's what you want to see for a growth company. Just hits a new record every year, every quarter. Over half the S&P 500 uses Palo Alto Network. So it's a bit of a safer one. They're expensive. Oh my goodness. TikTok making me saying I'm AFK. Okay. Sorry if it went out for a second. I'm back now. They said I was AFK. All right. Hey, what up, Cruz? He says, I wish I bought Dave, hoping earnings would convince me. Yo, what's weird is Dave actually did something. They did something called preliminary earnings where, CoreMedics did this one time where they just released their earnings early, where they just tell you what the earnings are going to be. So the earnings actually aren't out yet. They don't report earnings until March. So we have until March, another basically 22 days until March 2nd. I don't know. That was a guess. Or no, it's probably like 28 days, but they just released them early and told us what they were going to be, and they were great. So the stock's up that's why the stock's up 17%. So actually, funny enough, I just made a short. My most recent YouTube short and my most recent TikTok video is a video deep diving into Dave. What is AFK? Oh, that just means away from my, that means I left. TikTok, sorry, it made me fill out a CAPTCHA and it broke the stream for a second. Okay. Where is Dave? Yeah, there's Dave. Dang, we're up 17% or $108 on Dave today. AMD's having a nice recovery. AMD's up 7.5%. Robinhood's up 13%. Sure, something's down though. Only a couple. Yeah, dang, Reddit reported earnings. Reddit's down. Progressive's down a little bit, but that's just because they're, when tech's doing good, they usually do bad. And then Southern Company, the utility stock. Okay, let's look at some more stocks here. Wait, how's my Robinhood portfolio doing? Or how's just the whole market doing? SPY right now at a new intraday high. So the SPY's doing great. I think the SPY literally, how there's all this, market, fears and stuff. The S&P 500 is only 1.2% off all-time highs. Isn't that crazy? Like, if you would have only owned the S&P 500, you would have never known about this whole software dip. We're only off 1.2%. Hey, what up, user TX? Fantier said URAS stock. Let's pull up. Wait, I typed in USAR. Unfortunately, I can't find that one. I did look for it. And Charlie said loaded up on NUTX stock. Is that Nutex? Let's check out Nutex Health. He loaded up on it. Good to see you. Hope everyone's having a great Friday. I know the market's pretty green. Green Friday. Do I trust this green? I actually do, Tragon. I'm actually, for the short term, who knows what's going to happen in a couple months, but I do trust that one. Oh yeah, so Nutex Health, it looks like they fell a bunch 2-3 days ago. I don't know the exact news, but I'm pretty sure this is one of those hospital groups where they own like not many, but like 20 hospitals. Yeah, if you kind of look on the left there, hospital, 27 quality care facilities, and they have 10 more upcoming. So there's a nice kind of tailwind for earnings. Like those aren't even open yet. They will be one day, and that'll be some future revenue for them. They're basically just spending their net income, and or that's not what I meant. Yeah, or they're investing in the future. Here's their net income right here. It's great, like 50 to 100 mil a quarter. The sales are up 300% as they opened recent hospitals and I think acquired a company too. I don't know. Anyway, they had a great beat this quarter. Yeah. Analysts expected 213. They did 267. So yeah, hospital division, that's 97% of their revenue. And that's led to all the revenue growth. Pretty cool here. So it's like a pure hospital play or something like that. Quality care facility. Hey, sexy money six, dude. No way. Thanks for the 5 TGIFs. I appreciate that gift there. If you got a stock you want me to look at, let me know. I appreciate you. Is there any dividend stocks to buy? I think Progressive is pretty decent right now. Ticker symbol PGR. You know, but I think you're talking about like a higher yielding dividend stock, like a high yielding play, like an ABBV. This one has a 3.1% dividend yield. If you're looking for like a healthcare play, ABBV, get a 3% dividend yield. I just bought them. But what did I most recently buy on the dip? The only stock I really bought, I didn't do much. I bought some Weeble, but I bought a share of Amphenol yesterday on the dip. Couldn't help it. I saw it tanked, 10%, and I'm like, then it fell more. So I bought one at 128. It's almost at 138. So yeah, there's kind of my other buys back here too. So APH stock is one I've been buying. Or dollar cost averaging into, I should say. COTY stock. COTY. Here we go. We found it. Dang, they're down 14% to an all-time low. Dang, that's unfortunate. I feel bad. All-time low, and they reported earnings. So let's see what the earnings were for them to do that. 2026 Q2. Is that what just came out? Earnings call. Q2 loss. How long ago? What? It's not saying the quarter. Well, anyway, I don't know if this is the most recent earnings report right here that we're looking at, but let's just say it is. So the revenue growth has not been good. If you kind of look at this top line growth, it's like negative to like low single digit, or it did grow actually year over year, 0.5. Wait, that's Q2. So this may be why. They expected 13 cents of EPS. They lost 13 cents. So that means they went net income negative. Dang, and the analysts were not expecting that apparently. I wish I could the numbers are like weird here. I wish I could, give you something more helpful here, but I don't love this kind of declining revenue. Yeah, if we kind of look, it's like kind of lower maybe than it was in 2018. I don't know. Then that income's kind of choppy. So, I don't know about that one. Nathan is why Hems is down. That one was unfortunate. So unfortunately, I have to go, but thank you to everyone who's watching the stream. I might actually try to do a stream in a couple hours, but if you want, hit the follow button, hit the like button. If you want, we're going to be streaming. If you want to support me, there's only one way to support me. Subscribe to my YouTube channel. It's called Nathan Roberts, and then link tree in my bio. You can like rewind the stream, rewatch it. But yeah, it's called Nathan Roberts. Type into YouTube, Nathan Roberts, also in the link tree in my bio. If you want to get this app I'm on, the one I've been using to analyze stocks, it's my favorite brokerage. It's in the link tree in my bio, the very first link there. And see you soon. Thanks again to everyone on the YouTube stream the most. Thank you, Michael Anthony, Looney, Outwork. Sorry if I cut this one a little short. We've only been live for, I guess, an hour. Well, wait, no, hour 40. We did kind of decent, but I'm going to definitely maybe do a late night live stream or something. Or we'll be, hey, y'all know on Sunday, we'll